Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bearish scenario where we are looking for a continuation to the downside in a wave C, 3 or Y. Now it might look complex, the fact that I have 3 counts on my chart, but it's mainly about B2 or X, which in all cases is a 3-wave corrective structure, and because this first move to the upside has the highest probability of being a 5-wave move, which in this case is then a wave A, it makes life quite easy as we are then looking in all 3 of these scenarios for an A, B, C zigzag structure to the upside. The most common target for a wave B and a wave X is between the 382 and the 886, but we're already at the 05, so now the target area is between 43.8k and 47.9k, and for a wave 2 the common target area is the 05 to the 786, which is between 46.8k and 43.8k, taken from the high to the low of A1 or W. If we go to the bullish scenario, then we are also still looking for similar price action towards the upside, but in this case we are labeling it a wave 1, wave 2 and a wave 3. If I put my drawing on the chart here and I flip between the different scenarios, then you can see that the price action we are expecting between the two is relatively simple. So also here that makes life quite easy between the different scenarios. Now here we're looking for wave 1, a retracement for wave 2 and continuation up in a wave 3. The fibs that you see on the chart are currently taking from this low to this high over here. Now in case the high of wave 1 is in, what we like to see is a retracement into the white box over here. The common target for wave 2, 05786, 41.2k to 39.6k. The 382 is a less common target for a wave 2 and is, by the way, not hit over here on my chart, as you can see, and the 886 is a very rare target for a wave 2. The invalidation for this scenario is price moving below this low over here. If we then look at that sub-degree count, right, that 3-wave structure to the upside in a little bit more detail, then we go to the 1-hour chart. As you can see, we are now having an A, B, C on the chart, right, which works for continuation to the downside, as well as that impulsive scenario in a 1, 2 and a wave 3 to the upside. Now in this scenario, wave A or 1 is already finished and we are looking for a wave B or a wave 2. These fibs are taken from the low to the high that we have over here, giving us the target area for a wave B or 2. For wave B, the 886 to the 382, 39.1, 41.8. For wave 2, 76.05, 39.6. 41.2k. Preferably the low of wave B or 2 is made after the 0.382 fib time taken from the low to the high of A or 1 to compare this move to the upside in time with the corrective structure to the downside in time, and it is by far most common that a corrective structure is ending after the 0.382. Now what you can see is that this low here is made before the 0.382, and also, as just mentioned, this low here did not touch the 0.382 on my chart, so therefore the probabilities are low that this is the low of the corrective structure, and we still have lower prices to come for this wave B or this wave 2. Now inside this target area there are 2 main areas of interest. First of all, we have the weekly level here at 41.5k, and then we have a target box here, some additional support sitting between 39.9k and 40.1k. If we then zoom in to this structure over here, so we're going to look at the corrective structure of a wave B or wave 2, then we have to look for this 3-wave flat structure here, where we then have a wave A to the downside in 3 waves, a zigzag. We're looking for a zigzag to the upside, by far most common in a wave B, and then we're looking for an impulsive structure to the downside in a wave C. The most common target for a wave B is between the 1.38 and the 1.236 trend-based fib extension taken from the high to the low of wave A, which gives you a target between 44.3k and 44.6k, which is nice as it is in confluence with this blue resistance box here sitting between 43.9k and 44.7k. As mentioned, the preferred scenario inside wave B is a zigzag structure to the upside, which means a 3-wave, a 5-3, a 5-wave structure to the upside, which is this scenario here. So now we're zooming into this wave B, and we are then looking for a 535 to the upside. So here we then have our first impulsive structure to the upside, potentially finished or one more high, after which we then expect a retracement to the downside inside the box that I have here. These fibs are at the moment taken from the low to the current high that we have, giving a target area for B between the 382 and the 886, 42.8k to 42k. What you can also see is that price here was making higher highs and higher lows while volume was moving to the downside, and that is typical wave 4 and 5 price action. Highest volume in your wave 3, eventually you start grinding to the upside in a few 4-5s before you eventually expect a move to the downside. Now if price does move towards the upside first and takes this high, we have important resistance just above a price. 43.5k is the point of control of this piece of price action here. After that, we would then expect a move to the downside or of course directly, where for support we have a daily level here at 42.5k, and we also have a daily naked point of control at 42.1k, acting as a little bit of support to then continue our way towards the upside for wave C. Wave C by itself should also be an impulsive structure, 1, 2, 3, 4, 5, where of course we expect these highs to be taken. If we then zoom out again to the 1 hour chart and we look at the bullish scenario, then we are not looking for AO1 to be finished over here, but we are looking for one more high in a wave of 5. 1, 2, 3, 4, and we are looking for a wave 5 to the upside. Common target for wave 4, nicely respected. Invalidation also not hit, and the low of wave 4 is made after the 1-to-1 fib time, taken from the high to the low to the high here, comparing wave 2 in time with 4 in time. That's also what you like to see. Now in this scenario, we of course are looking for an impulsive structure to the upside in a wave A or 1, after which we then expect a 3-wave move down, and also in wave 5 we are looking for an impulse to the upside. If we then zoom in to this structure over here and we look for this wave 5 in blue to the upside, we are of course looking for an impulsive structure to the upside. So from this low here, remember this is the low of wave 4, we are looking for the blue wave 5, right, that I've just shown. So we are looking for an impulsive structure. Preferably, this impulsive structure is a direct structure, 1, 2, 3, 4, 5, ending inside this target area, which is between 43.8k and 45.1k, which is in very nice confluence with the target box that I mentioned earlier. So that's very nice, after which we then expect a deeper retracement to the downside in a bigger wave B or wave 2 lower prices. Now an indirect way to get a wave of 5 is that this structure to the upside is only your wave 1. Now we're looking for a wave 2, and then you get another 3, 4 and 5. So your impulse is going to be much bigger, and then after this wave 5 is in, it finishes the bigger wave 5 as well. So pretty much you are then finishing the blue 5 over here. But what you can also see on my chart is the fib times, and these fib times are taken from the low to the high of wave 1. Let me put on this over here. So from the low to the high of wave 1 to the low of wave 4, because if wave 3 is extended, wave 1 and wave 5 tend to be quite similar in price and time. And over here you can see the fib time 1 and the 1.618, which is a nice target for a wave 5. So therefore preferably we would go directly to the upside and finish wave 5. If this is only the first structure in a 1, 2 and then a 3, 4, 5, this wave 5 is going to be very, very, very long compared to your wave 1, which lowers the probabilities for a wave 5 towards the upside and increases the probabilities that this move to the upside is a wave A, B, C for then a flat structure as explained earlier. If we look at the CVD divergences, then we have some bullish CVD divergences. These ones already played out. Price took the high. That's very nice indeed. Price then came towards the downside, created bullish divergences, but as it moved towards the upside, it also created bearish CVD divergences. So it's a little bit of a mix at the moment. It's nice to just be patient, wait and see which high or low is going to be taken, which divergence is going to play out. So if we then look at the probabilities of the different scenarios, then on the low time frame, which is the 4-hour time frame, we are still looking for price to move towards the upside. Of course, this goes in waves, right? We do expect a bit of a retracement before continuation, but higher prices are still expected. And of course, in the wave B, 2 or X, because the probabilities are higher, this is a 5-wave impulsive structure, we are looking for at least a zigzag to the upside. But also in the bullish scenario, the price action is similar. On the micro, which is the 1 hour time frame that you can see over here, we are still looking for a deeper retracement to the downside. This low was made before the 382 and also above the 382 over here. Low probabilities, that is the end of a corrective structure. So we are still looking for lower prices in B or 2. Same is true in this scenario where, hey, if we go up for a wave 5, we are still looking for a deeper retracement to the downside in a wave B or a wave 2. Locally, when we zoom in to the 15-minute time frame, then the probabilities are higher for this flat scenario here, where if we move towards the upside, we do so in a 3-wave structure for a wave B, and then a move towards the downside in a wave C. Locally, on the 15-minute chart here, we are looking for these highs to be taken, either in an impulsive structure, 1, 2, 3, 4, 5, preferably, of course, a direct move towards the upside, or a wave A, B, and then a wave C. Inside this wave B, a zigzag structure. At the moment, as it stands, probabilities would be higher for this flat structure, wave A, B, and a wave C towards the downside, mainly because locally here the volume is already going down as price is moving to the upside, suggesting that this move towards the upside is soon to be finished, and we can expect a little bit of a retracement inside that target box for then a potential flat, before then continuation to the upside in wave B. Not to forget, we have a little bit of resistance above us. This point of control could be nice to hit at 43.5k and then observe the reaction here. Of course, for support, the daily below, we have to observe the reaction there. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.